Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to talk about what I'll be looking for to confirm a rally attempt. The long-term trend has been up for a really long time. This has never been in question. Shorter term, the market has had some issues with breadth, not suggesting the underlying strength. This has led to some flat trading from time to time. Now the market looks ready to attack its highs. In my opinion, it's pretty much a done deal. The S&P is going to rally up to 3,000 beyond. Okay, it's a done deal. I've been saying it for a really long time. The question is whether it happens now or happens later this year. In this video, I'm going to show you the indicators that I'll be looking at, that I'll be tracking to confirm a rally attempt. Okay, so let's get to them. Okay, first is the NYSE AD line. Okay, up top we have the S&P 500. Down below we have the cumulative NYSE line, NYSE AD line. As you can see, it's trending up. This has been trending up for the entire time. It's been trending up for a while. The beginning of this year, it hiccuped a little bit, traded in a range, but then it broke out. Now it's at and trended up. Right now, it's sitting at a new high. This completely confirms the market strength. It's one of the reasons why my bias has been maintained to the upside all along. This indicator will roll over and trend down for a couple months before the market runs into any trouble. And since it's not even close to doing that, long-term traders should have have nothing to fear right now. Okay, so this indicator is already on board. It's telling us, if the market wants to run up, it can do it. Okay, backing up a little bit, here's the same one, except this is the weekly version going back several years, going back about 5 years. Same thing, trending up, no problems. The market will not run into any issues longer term until this rolls over and actually trends down. And considering it's well above its 30-week moving average and it's at a new high, we're not even close to that. Okay, so both the daily AD line and the weekly AD line are 100% on board with the market moving higher. Here's where we run into a little bit of an issue. It's the S&P 500 versus the new highs. As you can see, back last fall and winter, when the market was trending up with some force, we have a lot of new high prints over here. But for most of this year, we've had new high prints down below. Okay, so for me to believe if the market's going to break out and attempt to rally, I'm going to want to see new highs print in a higher box like this. Okay, I want to see prints similar to what they were last fall and last winter, not similar to what they've been most of this year. Okay, that's one thing I'll be looking for. Okay, here is up top, this is the cumulative high-low differential. So it's highs minus lows, and then we just take the cumulative of that. Okay, so it's kind of similar to new highs. So as you can see, when the market is weakish, you go back to the end of 2015, the high-low differential will trend down. It'll trend down under its 50-day moving average. When it trends up, as you can see, when the market is healthy, the line will trend up. It's staying above its 50. This year, it's trended mostly sideways. Okay, which makes sense because the market has been mostly sideways in a range. Okay, so we get sideways trading here, mostly sideways trading here. If the market is going to break out and do this, then we're going to want to see this, the high-low differential here, act more like this and less like this range. Okay, it's just something I'll be looking for confirmation. Okay, market breaks out here and runs, we're going to want to see the cumulative high-low break out of this box and trend up also. Okay, up top is the S&P 500. Down below is the percentage of S&P 500 stocks above their 200-day moving average. As you can see, last fall and winter, we got a lot of prints up here in this box, mostly in the 70% range. There was one little dip here, not a big deal. A couple prints up in the 80% range, but for the most part, we got a lot of prints in 70% range. So this year we've had, aside from the initial, volatility to start the year when the market was like up, down, huge amounts, week to week, we've gotten most of our prints down here in the 50 to 60 range. So again, like the new highs, if the market is going to break out here, make a new high, and if the S&P is going to run up to 3,000 and beyond, I'm going to want to see prints up here. Okay, very simple. I want more stocks to participate. Now, all these indicators have been with the NYSE. I could do them with the NASDAQ too. Okay, so here's the NASDAQ new highs and you could match these up pretty closely. You know, so when the market, you know, trended up here, new highs printed mostly here, and you can pause the video, you can go through the chart that every time the market trends up, you get new highs printing at a decent level. Every time the market runs into problems, you get new highs printing at a lower level. So over the last 2 months, new highs have been printing at a pretty low level, despite the fact that the NAS itself is up at a new high. We're going to need this to change, okay? If the market is going to break out and run a little bit of here, we're going to want to see new highs at the NAS up here, okay? We want to see them print in a box that's much higher than what they're currently printing at. Okay, thanks for listening. I hope you got something out of this. Okay, the market's in good shape. There's a couple indicators that are kind of holding it back. If the market tries to trend up, we want to see new highs print higher. We want to see the cumulative high-low take off. Okay, it's pretty simple, not rocket science here. These indicators are available with any trading platform. I don't have any special secret here. Long-term trend has been up for a long time. We just need some of these indicators to turn up in order to confirm some shorter-term strength. Okay, again, thanks for listening. If you like the video and want me to do more, give it a like here on YouTube. Share it with your trading friends. You can also subscribe to my channel right here at YouTube. Come check us out at Leavitt Brothers, leavittbrothers.com, leavittbrothers.net, where we provide trading ideas and market analysis. Again, thanks for listening, and I'll see you next time.